Greetings to Melan guys. Today we are going to do accounting grade 12 debtors collection schedule. Remember guys, you've been taught this thing since I think January. So what I'm going to do, I'm not going to explain the basics of budget or the basics of this topic, debtors collection schedule. I'm just going to show you how to calculate and how to apply these figures after the calculations. And also remember, they are giving you the expected debtors collection based on the past, on how they collect. And then I think that's where most of you gets difficulties and gets confusion on understanding this thing. All right, let's start. As you can see, I have this information adapted from the question paper of the final examination 2020. Okay, I'm going to go through this information quickly and then we'll start. Now, complete the debtors collection schedule for March to May 2021. We have the information. This information is adapted, okay? As I said, from the question paper, the November question paper 2020. If you can go and download it, it's question 3, right? Now let's start. We have total sales and cost of sales. They gave us sales for March, April, and May, as well as the cost of sales. Then they say goods are sold at a markup of 75% on cost. Then the credit sales are expected to be 65% of total sales. Right? I'm repeating this line. Credit sales are expected to be 65% of total sales. Then we are moving to information B, which says expected debtors collection based on the past. Point number 1, 40% collected in the month of sale, less 6% discount for early payment, meaning that this business collects 40% from its debtors in the month of sale. Let me give a practical example. If you go to a store and you buy on credit on June, it means they are going to collect their debt on the very same month, which is June, and they will give you 6% discount because it is an early payment, right? And then they again collect 50% in the month following the month of sale, meaning or if you made you bought on credit on June, they will deduct from July, then 8% in 2 months, then it goes with a trend. Then 2% is regarded as uncollectible, right? After 2 months, if you failed to pay after 2 months, they write you off. It is regarded as uncollectible. Now I've read all the information. Now we can go to the calculations, right? All right. Let me give you let me just not say. Let me give you few time to process. Alright, sorry about that. I couldn't pause my recording, but we can proceed. Now, this is the solution. Okay, this is where we are going to work, not a full solution. On this solution, we have already been given this amount for January and February. Remember, these are the credit sales, right? They've given us credit sales for January and February. Now we'll have to calculate March, April, and May. Okay, now how are we calculating these things? We are going to check our information, right? They said credit sales are expected to be 65% of total sales, right? Okay, then we are going to calculate credit sales for March, April, and May. Right now, look on the information of total sales and cost of sales. We are given. Remember, this information inside the box is total sales and total cost of sales. But Tina, we need we need credit sales. We have total sales, which means total sales is 100%, but credit sales is 65%. If we say 100 minus 65, you are going to remain with 35%, of which will be the cash sales. But Tina, we need what? The credit sales. Okay. Then we are going to calculate. For March, we have 560,000, right? We are going to say uh, we are going to say 560,000 multiplied by 65%. 65%, which will give us I'm not having the calculator on screen. 560,000 multiplied by 65, which gives us 364,000, right? Then this amount will be our credit sales for March. It's going to be 364,000. Then we are going to look for credit sales for April, which they gave total sales of 630,000, and we are going to say for we're going to say, sorry, I forgot the amount. It's 630,000. 630,000. I'm sorry for that. It's acting up right now. 630,000 multiplied by 65%, which will give us how much? 630,000 multiplied by 65. It will give us 409 500. Then we are going to take this amount straight to the debtors collection schedule. Then we are going to calculate credit sales for May, which is they gave us 770,000. They give us 770,000 as total sales, and we are going to calculate credit sales. We are going to say 770,000 multiplied by 65%. It's gonna give us let's calculate it quickly. 770,000 multiplied by 65%. It's giving us 500, right? Then this is our credit sales for the months, right? Now we are going to the confusing part, which confuses many learners. On my experience as a tutor, I've seen that while we are going to draw up the information on how to collect the money from your debtors, right? Given that information, remember the term for collecting for debtors collection is 30 days, right? Then this is the first month, the second month, third month. Okay, sorry, let me do this quickly. The first month, second month, third month, and the fourth month, right? Here we are going to have it's 30 days. Remember, the first month is 30 days, Once it reaches the second month is 60 days, and then third one is 90 days, then the fourth one is 120 days, right? To make things easy for you, you put the big line here, so that you don't be confused, you are not getting confused, right? Put the big line. I'll explain. Okay, we said 30 days, 60 days, 90 days. After 90 days, you write off, right? That is why I'm putting the line, which means it is written off. Okay, let's check here. They said 2% regarded as uncollectible 2 months after the sale, meaning if it reaches to that level of 2%, we write off. Okay, then we are going to say we are going to have those percentages. They said we collect 40% less 6% discount. Remember that. Oh, my font is too big. My font is too big. Let me reduce it quickly. To this 12, right? Then we are going to collect 40% less 6%, then followed by 50%, then followed by 8%, then that is 2% written off, right? Then now look at this. We have March, April, and May. On the I'm reading on information A. We have March, April, and May, right? Which are the budgeted months, right? Look on the solution. They've given us that we have January, February, March, April, and May, right? So these months on debtors collection, January, February, March, let me indicate with this cursor. These months are going to be written here. We have January. Let me bold them. Right. We have January. Right. We have February. We have March. We have April and May. Okay. Then from there we are going to collect, right? Remember, our the months that we focus on is March, April, and May, right? Then we are going to collect on March, April, and May. Don't forget the collection pattern. They said 40% collected in the month of sale, 50% in the month following. When they say collected in the month of sale, they mean that it is collected. If you bought on credit on June, they are collecting the very same month, which is June. Okay. Then meaning if this data bought on credit on January, they are going to collect on January, then collect on February, then March, which means April is written off. Then if they bought on credit on February, it's going to be February, March, April, and May will be written off. Then if it's March, it's going to be March, April, May. Then June is written off. If it's April, it's going to be April, May, June, then July is written off. If it's May, it's gonna be May, June, July, August. Alright, but look our debtors collection schedule. We have these 3 months, of which are the ones that we are focusing on. Okay, meaning we are going to look. We have January, right? We are going to check on our collection pattern. We are going to check. Let me try to make this page be doubled. I don't know if you will see. I think, yeah, I will take it back. Check. We have January, right? January. Then January, we are going to look. We need on January we must collect for March, April, May. On February we must collect for March, April, May. What I'm trying to say is that on each month we must collect for March, April, and May. Okay, here is January, right? On January we must collect for March. Let me highlight it. We must collect for March, and I said 2% is written off, meaning what? These ones we are not considering them. Let me put them in red so that you can see what I mean. We are not considering them. Why? Because these ones are written off. They exceeded the payment timeline. Okay, now we are focusing. I said on January we are collecting for March, April, and May. February we are collecting March, April, and May until the last month. Okay, so on January, on our collection pattern, it tells us that we only collect for March, because what we need is March, April, and May. We don't have April and May. Okay, we collect for March. How much are we collecting? We are collecting 8% of the debt. Okay, which means that, let me resize so that you can see, which means that we are going to check the credit sales for March. I'm sorry, for January. Credit sale for January is 204 750. I'm talking about this amount, right? This amount. Then we are going to multiply it by how much are we collecting? 8%. We are going to multiply it by 8%. Then how much is it going to give us? 204 750 multiplied by 8%. It gives us 16380. Okay, then this means that for March we collected 16380. Okay, then we are done with this line. Then we are coming here on February. We said on each month we collect from March, April, and May. Then we are on February. On February we have March. We have March, right? We have March. Let me take it back to yellow. We have March. Why are you doing this? We have March and April. Then we are going to check. Okay, on March we are taking 50%. Okay, then we are going to we are going to look for credit sales for for February, because we are on February. It's 250. Okay, it's gonna be 250 multiplied by, we're collecting 50%, multiplied by 50%, which is equal to it's gonna give us 125. Then we are going to have 125, right? Then we still have April, of which we are taking 8%, right? Then we are going to say 250 multiplied by 8%. Sorry, I forgot to put percent on this one. Multiply by 8%. Then it's giving us how much? 20 or 20. Sorry. Then we are going to have 20 or 20, right? Then we are going to match. We are going to match. We need March, right? We need April. We need May. You see, on March we take all because March consists of all the months that we need to collect from. Then on March we are going to say we have on March we are going to say that we collect 40% less 6% discount, right? Then we are going to check for credit sales for March, which is 364,000, right? Then we are going to take 364,000, then multiply by 40%, multiply by 94%. Where do I get this 94%? They said that we less 6% discount for early payment. Meaning when we less 6% discount, we less it from, let's say agree this person owes, we have to collect 40% of the debt. That one is what we have to collect. But there is another there is discount on what we are collecting, and it cannot be on the percentage set, right? Discount, we are going to say 100% discount minus discount is in its own. I don't know if you get this. It stands on its own, right? We're going to say 100% minus 6%, it gives us 94%. That is why we're going to say credit sales minus 40% of debt minus 94% of discount. All right. Then it will give us how much? It will give us 136,564. Is it 864 or 564? 864, right? Then we are going to say we have 136,864. Okay. Then we also collect for April, which is 50%. We are going to say 364,000 multiplied by 50% is equal to 182,000. Let me confirm it with the calculator. 364,000 multiplied by 50%, which is correct, 182%. Then we are going to say we have 182,000. Did I say percent? Then for May we are collecting 8%. It's gonna be 364,000 multiplied by 8%, which gives us 29120. Then we are going to have 29120, right? Then we are going to April. On April we are collecting April and May. We don't have June on our budgeted months, right? Then on April we are going to collect is it gonna open another page where what is it doing? Okay, it's fine this way. No, let me do some plan quickly. Okay, it's fine. We're going to collect for April for 40%, right? April 40%, and then less 6% discount. It is on April, so we are going to have 409,500 multiplied by 40% multiplied by 24%, which gonna give us how much? Let's do it quickly. 409,500 multiplied by 40% multiplied by 94%. It is giving us 153,972. Remember, it's April. We on April. We are on the month of April, and we are calculating for April. Then it's giving us 153. How much? 153,972. Then for May we are collecting 50%, right? It's gonna be 409,500 multiplied by 50%. Okay, then it's gonna give us, sorry, let me write it. We are saying we have 153,972, 409,500 multiplied by 50% is equal to 204,750. 204,750. Then we are done for April. We are going to May. On May we are collecting for May, right? On May we are collecting for May. Then we are going to say we are collecting 40% less 6% discount. Okay, then we are going to have 500 multiplied by 40% multiplied by 94%. Okay, is equal to, then we are going to say 500 multiplied by 40% multiplied by 94%. It's 188. Then we are going to, it's May on May, remember. Then we are going to have 188. Okay, now what we are going to do next, we are going to have totals, right? You are going to add all the amounts on May. They must give you 422,058, and amounts on April, they must give you 335,992. Amounts on March, they must give you 278,369, right? These are the credit sales. Remember, we were calculating March, April, and May. That's why we are having totals on these months only, right? Let me resize it so that you can see clearly, right? This is our complete debtors collection schedule. Like I said, the question paper is for November 2020. This is the question 3 of budgeting. You can go and check. Thank you very much for watching, guys. Comment, write down if you have the questions, I will answer. And then if you need another lessons on other topics that you seem to find difficulties, please comment so that I can do those activities. Thank you very much. I'm out.